Hey guys, Justin here again from Simplified Investing. I hope you guys all had an amazing day trading. I really wanted to put together this video at the request of you guys and some of our members. Really, it deals with the three hardest things that traders face. I really try to break this down into saying, obviously I'm not going to sugarcoat it. Trading will be difficult. It's something that is very straining on you emotionally. And it's something that I tell people, if it was easy, everybody would be doing it. And that's the first thing I want to tell you guys. It is going to be difficult, but with that, when you do find success and you actually become good at it, you get a lot bigger reward from it because you're learning something that you actually have put time and effort into and also receiving the benefit from doing that. One thing I wanted to do before I got into this, if you guys give a shout out to all of our members today on our Roku play here. We had 2 call plays here on Roku. Look at this strong uptrend here. Entered on this reversal inverted hammer off of this 118.41 top. We get this push up here, closed out profits here. We get this retest. And then we had our second entry here on this bull flag breakout consolidation down into this 124 bottom, confirming that support again and pushing all the way up to this 128 top, which you can see we're getting rejected at. So before I get started into this video, if you guys could like and subscribe to our channel, it would be greatly appreciated. And if you are interested in taking your trading to the next level through getting our alerts, our course, mentoring, and live streams, if you could head to simplifiedinvesting.site today, we'd love to have you guys. So the first one, and probably the most difficult thing that traders face, especially beginner traders, is going to be emotions. And there's really no clear-cut way for me to say, hey, you do this, you'll get rid of emotions. That's simply not the case. And it's one reason why trading psychology is the hardest thing that you will endure when you are trading. And it's something that I can truly say it's very difficult at first, but with time and with faith in your trading plan and things along that nature, you can minimize emotions. But as everyone says, there's no way to completely get rid of emotions. And really, what I'm saying is fear of missing out is one perfect example. You see a lot of beginner traders say, Netflix or Tesla's a prime example. Tesla's moving up 8%. Oh, I should get calls and try to play it without any rhyme or reason, any plan or anything behind that entry. They just have a fear of missing out on that move. That's one area of emotions that can really ruin your trading account, is by doing what I just mentioned. And it's very common to play them high moving stocks that have high implied volatility. And I can be the first to tell you it is a very, very risky game for you guys to play. The other one, and perhaps the one that sticks with traders the most, is really, so say, we'll go to Netflix, for example, because I have this chart up. See, you play put options here, and you close out here at 20%, 10%, whatever it might be. That's a great gain, right? Don't get me wrong, but then traders are like, oh man, I missed out on an extra 50% drop here. Then you tried to play calls here, I missed 5% here, whatever it might be. That's going to be difficult, and what I tell people is you have to accept the fact you'll never perfectly time a trade. You can never perfectly time the bottom or the top. What you have to do is have a plan, execute it, and regardless of the stock moves, does it suck when it moves more than what you had? Yes, but you could also have lost in that position. And that's really what I try to teach our members, is no matter what, if you're in profit and you're following your plan, even if you're losing and you follow your plan and it shoots up after that, as long as you followed your plan, you're a step ahead of everyone else. So you'll see people just chasing plays, for example, or they had a losing play here, they bought calls that shot down, then they're already down on the day and they'll try to chase this play. I've seen it way too many times, and that really will lead to blowing up your account. Never, ever chase plays. The second one, which is really important too, is with trading, experience isn't required. You may be wondering, what do you mean by that? With trading, you, your cousin, anybody who's interested can get started in trading. You don't need any background knowledge. You don't need a degree. You don't need nothing, which is nice about it, but it also brings to it a downfall. You look at lawyers, you look at doctors, they have several years of schooling, exams, and things like that. And then you go into trading and people think they'll be an overnight success, which truly isn't the case. If you are going to be successful in this market, you do have to study. There's no doubt about it. However, if you do put in the time, you can definitely be successful. And that's one thing that I try to teach people. You aren't going to be a millionaire your first night or your first week. It's simply not the case. You will encounter losses. You will encounter a losing week. Likely will encounter a blown up account when you first start. It happens. It happened to me. It happens to everyone who starts. And that's really where you learn, but you have to study the market. Don't just sit here all day and trade and then just think that's good enough. You can go up here, rewind previous weeks, previous days, and try a strategy. See if it works intraday. You can paper trade. You can go on YouTube. You can go on Google. You can read books. There's so many resources out there that people don't utilize when they start trading that are going to be great resources for them. One thing that is going to be the biggest teaching tool on the market, I tell people you can read as many books and stuff like that and read about all this stuff, but your most learning will come when you trade with a real account. And people ask me, what are my views on a paper trading account? They're great if you're testing a strategy after you've traded for a while, basically in a simulator. However, beginner traders, it's not worth it. What happens is you don't have you're not attached to your money essentially. So you have 200 grand in your paper trading account, and then you go into it and you're down 70 grand, and you keep holding, you're up 100 grand. In reality, if that was real money and you were down 50 or 80% of your position, you'd likely be closing. However, you're like, oh, it's just paper money, I'll hold on to it. That's really where beginner traders get hurt, because they just think that they can hold on to these positions and not formulate a strategy, and it's paper money, so it makes no difference. Your learning will come when you fund a real trading account. Once you fund this, don't obviously go all into your account. Play smart, have smaller positions, and start with a smaller account size and learn as you go. That's the nice thing. You can learn every single day on the market. I learn every single day on the market about my strategy, formulating and better executing my strategy, and things of that nature. And that's the nice thing about it. You learn every single day. And there's so many resources out there now to help you guys. And don't overcomplicate things, but learn as you go. Start a small account and learn as you go. Study after market hours. Study your plays intraday. Oh, why was this play a loser? Oh, what did I see on this play that I didn't see on the other play? Just study your patterns, read books, and learn plans. And if you guys are interested, you can check out our course too to learn as well. The last one, and this is something that I tell people too, I tell our members, is when you're a retail trader, you don't have account restrictions. So you can go in 100% in your account in one position and it doesn't matter. Whereas if you're an institutional trader, you have account limits set where you can only go in with 1% of your account or whatever it might be. You have those limits set, which is why it's dangerous, because when you're a retail trader, you can go in 100% on a position. You have no account restrictions. You can ultimately go in with as big of an account as you want, as much as you want into one position, not enough. You don't need to research as much to go into a position, and that's really what makes it challenging, because then you get institutional investors, obviously, with better account management, they have better news and things like that. And then you have retail investors that are going in with 100% in an overnight swing, for example. And that's what makes it very difficult. As you know, trading's a competitive market. When I buy, someone's selling. Either one person loses, one person gains. That's really what it is. It's going to be a big competitive market, so you're really looking for your competitive advantage while you're trading, and that comes back to dealing with emotions, having a plan, and studying. Those are going to be very, very, very important things to have when you are trading to ensure that you are successful. Again, guys, always formulate a plan when you get in and practice proper account management. Those will be the two biggest things to help you learn as you go and also grow as a trader. Thanks again, guys, for tuning in. If you enjoyed this video, if you could give it a thumbs up, it would be greatly appreciated, and subscribe to our channel, as well as checking out our team at simplifiedinvesting.site. We'd love to teach you guys and help you guys out more. Thank you and have a great day.